let's pivot our attention to our stocks to watch this week, starting with Essent Group. Now, in terms of putting in perspective what we're seeing with the overall market, very important right now to be following these sell rules that we're seeing, because we don't know when the market's going to turn. But in terms of Essent Group, we did see a recent breakout for this name.
Yeah, and now they're in the mortgage insurance business, and so there's a lot of talk of, oh, with rates as low as they are, more people refinancing, and some of those mortgages still do need insurance, and that's where Essent comes in. Now, a lot of their business has been more recent. The last couple years have seen a lot of the vintage is from the last couple years for a lot of their insured properties. So that is something that is good, that it's recent action, so that kind of shows growth. It also, this is not the subprime thing that we were dealing with 10 years ago. The FICO scores on these loans are above 700, so this is not subprime, so it's a very different action with this housing market, not necessarily as much of a bubble that we were seeing back before. So it does have solid growth. The growth, you look at the earnings, it's strong, it's double digit, it's not anything that makes you say, wow, but it's so stable. We have an earning stability rating, and it's at 2, the lowest being 1, that being the most stable. So this is a very stable earnings growth story here.
All right. Well, taking a look at the chart, maybe a little bit of downward pressure here early in the week, but I think that also speaks to how investors should be handling a stock when they do see a breakout.
Right.
How do they know when it's time to get out if things do head south on them?
Well, and this is where you have to kind of let the market tell you. So we saw that strong breakout, a double bottom, and everything looked good about that base. You had the second leg undercut the first leg, kind of pulled back all the way to the 40-week moving average line, and then kind of start moving again. And that buy point was right at 50. So now that kind of becomes a line in the sand. Can you hold above that? And then we always have our final sell, that's the 7 to 8% rule. And we want to make sure that we're not taking big hits. Now that is the maximum that you want to lose.
Right.
There's nothing that says you can't sell a little bit earlier if you're seeing the market weaken or the stock weaken, especially if it's a stock that makes progress and then comes all the way back to the buy point. Let's say it makes 10, 15% progress, then comes all the way back to the buy point. That's a little bit more unusual and potentially a sign of trouble.
Is this also where you would want to balance looking at that daily chart and perhaps a weekly chart as well to put it in perspective, or are you wanting to look a little bit more at the nitty-gritty in terms of testing the buy point?
Well, they should both show the same thing, but I do like to look at both, because sometimes there's something you see on one that you don't see on the other, and especially if there's a stock that I'm trying to hold, I usually step back and look at the weekly, because when the shorter your time frame that you look at, the easier it is to get scared. Because you look at an intraday chart and it's like, oh my gosh, it's plummeting. But you step back to it weekly and it's like, oh, in the overall scheme of things, this is just kind of a blip. So you have to put that perspective in mind in terms of what your time horizon is.